what I teach is that edge, and understanding your risk and risk management is about your psychology, because you know how to manage your risk. So therefore, if you're not managing risk, it's purely about psychology, and it's essential for you to be a successful trader. Sorry, give me a second, sorry. Yeah, so here we go. So we're gonna be looking at GU and seeing what's going on with GU, GBP USD. We're gonna be obviously going through our gold and our usual pairs. All right. Now, this market, we saw a lot of things happening last week. We saw the elections happening in GU. Okay. We saw, non-farm payroll, etc., etc., etc. Okay. And at the moment, as we spoke about, this market has been trading down within this kind of little wedge pattern. Okay, I'm going to delete everything off our screen so we can start again. Okay, but we're going to zoom all the way out to understand what GBP USD has been doing and what we think it may do next. Okay, now, despite the overview, despite our overall bias, we have to, because we're day traders, we must be able to trade what we see. Okay, or simply be waiting for that one setup, which is not realistic. You're not going to be able to just find one setup that you're going to trade that may happen in October and you're waiting for that time. All right, that's not how it's going to work for any newbie traders, any day traders. It's nice to think that you can always take AAA setups, a setup which you've looked at and blah 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 blah. But in reality, you're going to have to play the cards that you are dealt on a daily basis. That doesn't mean that you have to trade every single day. Let me make that clear. That doesn't mean you have to trade every single day. However, that, triple A golden setup, boom, 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 all your stars align, 5 numbers or 6 numbers plus the bonus. That scenario is not going to present itself every day. It's not going to present itself every week. It might not present itself in a month, okay, in multiple pairs. Now, what does that mean? Does that mean you sit around and just look at the wall for months and months and months on end, and then you're going to put your heart and soul into one trade, which may not go your way because the markets still do whatever they want to do, okay? But I don't believe so. That's not the way. So what we're going to be dealing with today is understanding how to deal and play the cards that you are dealt, okay? The cards that you are dealt understand certain things on a daily basis. We understand that every single day there's a certain amount of volume that comes into the market at certain times. We understand that there are certain probabilities, things that happen that you can look for so that you can get involved in a trading opportunity. That doesn't mean that trade, because you said, that you're going to be selling this trade, that when you get in for the sell, that sell's going to continue to go and break daily, weekly, monthly structure and make you a billionaire. It doesn't mean that. Okay, it just means that at that point in time, at that moment in time, in that day or those hours, those minutes, or the market was going in the direction that you predicted it will go in. Okay, now the reason why I'm focusing and harping on this is because you have to understand when you've won, when you can take profits out of the market. It's very important to understand when you have won. Now, on the bigger picture, we may be thinking to ourselves, this market's going to sell off and start breaking structure and going head to hell, but we don't know if it's going to do that straight away. It's not something we know, okay? So therefore, how do we take profits? Well, how we take profits is we trade to structure, okay? Even if the market continues to go on running on and on and on and on forever, you have to be able to understand where you're going to be taking your profits, okay? Where you're going to be at least protecting certain profits. And that is to structure. So what do I mean by that? We're going to move off these charts and have a look, okay? What I mean by this is that if this is the markets and the markets are doing higher highs, higher lows, higher highs, higher lows, okay? In fact, let's go again. All right, the markets came from here. The markets came from here, for argument's sake. All right, so this becomes a swing low over here, and then we get in a trade, and this trade indicates over here, corrects, and continues. I'm going to make this red, illustrating a bearish indication for us to get into the trade. When we take this trade here like so, getting in here, placing our stop above the last high for an aggressive entry, or for our safer entry above this high, then in this instance, down here is a first place where we are taking our profits, or better still, protecting our position. Why? Because we're trading from structure, from this high to this low over here. Okay, now in this instance is a one-to-one, it's a poor example, but let's if I can make it a better example, and let's make it a better example like this, so it just looks better on paper. Okay, so it looks better on paper. Let's do this. Let's just reduce it a little pace like this. Looks a little bit better on paper. And let's just do this as well. Let's just make it that this was the structure over here. Okay, there you go, made it look better on paper. All right, like so. This would be making sure that when we get down to that level there for 1 to 3, okay, that we are protecting our position. What do I mean by protecting our position? I mean that this stop loss that's over here, that stop loss that is over there, you're either going to move this like this, when we get past this position here, or you're going to close your position here, saying that this is your TP, that's your take profit, and you're happy because you traded to structure, or you're going to do something called taking partials. Now, taking partials simply means if you place a lot size of, for example, 10 lots, which you're not going to. If you did have a lot size of 10 lots and you're in profit, you can go into your position in MT5 and you can go to that position that's profitable and you can edit it, modify it, and take 5 lots off the table, which means it's going to take off half as profits and leave half running. That's how you take partials. Some people might have a strategy whereby, I tell you what we do, when this market gets down to here, you take 80% off the table. So if you've got 10 lots, you're going to take 8 off the table and leave 2 running, just in case this market doesn't even kick back on you. It just goes like that and starts going to hell. You've still got a little moon bag, right, they call it, that's in here running for the trade. But I want you guys to get very, very comfortable with trading to structure. So if this market is doing this, okay, and then it comes down here bearishly, and then it comes up here, bullishly, and then it comes up here going bearishly, and then you're going to get in for the buy. I want you to be very comfortable taking your trade in between that world there, getting an entry in here and riding it all the way up here and understanding that you've traded to structure. This is going to give you some sort of plan of action when you're in a trade. So when you get up to that high, you are moving your stop like that up the arse of it, because you're looking for any excuse for it to stop you out. Or when you move your stop loss like that, then ultimately what you're doing is you're leaving yourself a slight, a little bit of opportunity for this market to go, you know what, we're just running straight through that level and we're going to keep going. And all of a sudden now you're in this trading, it's doing bits, Or you're going to take your profit there and be happy. You traded from this structure to that structure. Okay, let's look at this in a real life, in a real life, let's look at what it looks like, okay? So what it looks like for me, we're looking on this 4-hour time frame for argument's sake, okay? Now, let's imagine that we believe the market is bearish, okay? And we're going to get in for the sell. That's not the case. I haven't got indication for that yet, but let's imagine we do. If we do, I am going to be trading to structure. I'm going to be trading to structure. To getting in this trade, lovely. And I'm going to say this, but when the market gets down to here, this is end of the line for me. So I'm going to be moving my stop loss right up against this level, or I'm going to be taking my profits. I'm going to be happy. Now we may see this market do this. Have a look. Go straight through there. We're like, why did we take our profits there? Well, we take our profits because we've got to take our profits somewhere. We've got to make a decision at some point. Or why did I move my stop? Because it came back here, took me out, and then it fell down. Now, there are other ways in which we can manage our trades when structure breaks, etc. But this is a really easy, clear way to understand where you're trading from. So we're going to be. You can be more safe if you want to increase your profits. It's more safe about getting a better entry. getting a lovely entry at that point. Okay. Now, if we can do that, then that would be that's how we can increase our rewards, is by our entry. All right. So let's have a look, for argument's sake. Let's actually look at this GBP USD and see what it's been doing. All right. So on the larger time frame, okay, we had this market essentially, like I said, trading within this kind of wedge pattern. All right, making higher lows and making lower highs. Yeah, I've drawn this box because it's trading within this highest point and this is the lowest point. All right, after it breaking structure. So the market's in here. I ultimately don't really want to get involved in this square, or in the middle of the square anyway. We're kind of in the middle to high end square, but I really don't, it's not my dream to be in here. Is this market going to turn around right here? I don't know. This is just some yellow lines that are drawn on the screen. It doesn't mean that they're millimeter correct. But what I do know is within this high and this low, this is high. Yeah, this is in a premium of this range, and down here is in a discount. If this market pushes up into these levels here, I'm going to be quite, curious to whether or not we're going to be selling off from this premium, or whether this market is going to break outside of this bigger Russian doll. All right, this line over here. Remember, all of these lines are simply areas, but then when we look at areas, we use this previous historic structure as as levels. So here is a level. This area here is a level of interest that I don't want to see candles closing outside of there. To be fair, if they do start closing outside of them, I'm thinking to myself, maybe the market wants to do something else. If I look back even more historically, I can see these other levels in here. I can see these other bits of structure in here that I'm looking at. This is where we get our information from historically. These are daily highs. Okay. Now, as a day trader, we understand that the markets only move a certain amount of pips per day. So am I anticipating for GBP USD today to move 400 pips? No, I'm not. Because the average true range of GBP USD is a lot less than 400 pips. So me sitting here waiting today for this market to come up here for a sell is not going to happen. Not unless something really crazy, is a really crazy catalyst in the market to make it do that, which is unlikely. Yeah. So we're here looking at this market. And if I'm thinking I'm going to take a trade today, I've got to make a decision on a smaller time frame, whether I want to read and react to what the markets do. Now, I don't like where we are on a bigger picture. On a bigger picture, this market should be turning around now because it's been making lower highs, but who knows what it wants to do, because it's also been making higher lows, which I don't like. It's neither bullish or bearish. Well, it is, but within, it's like it's got a ceiling of this angle and this angle, which I don't love. So for now, this isn't my favorite pair at the moment. It's kind of mucking about. On a 4-hour time frame, we can see the market making higher highs, higher lows, higher highs, higher lows, higher highs. Then it making lower highs, lower lows, lower highs, lower lows, lower. Like, why did it stop here? Is it stopped here because it traded into a 50% of that impulse? Let's check. And if that's the case, did it do that before? Well, it traded near a 50% area, but like I said, for me, it's a little bit sketchy at the moment. All right, let's go look at something else. I don't want to look at this no more. It's not the most tasty looking market at the moment. I want to go look at EJ. Let's have a look and see what EJ has been doing. Have a look at EJ. Now, we drew these yellow lines some time ago, and EJ has been continuing to trade within those yellow lines to the point where we've pushed all the way up into a premium of this yellow range. This yellow range is a range that we've pulled out, that the market's been trading within. All right. Let's have a look at these lines, and it has, the angles of it has changed. Okay. If I was to pull this down a bit, the angles of this market has changed. Once upon a time, it was like this. I'm touching this data point here and this data point here, but we can see that from there, the market has created a new angle like so. Okay. And then we've seen the market move and trading within this little range here, this yellow range. At the moment, we're in the top of this yellow range. And the question I'm asking myself is the market going to make a retracement there? Because this is an all-time high. extreme premium, okay, an all-time high. What does that mean? That means that ultimately, the market is, people are looking at it and thinking to themselves, raw, like, this is really expensive. The euro is extremely strong against the Japanese yen. We've been hearing from Brother Alan how the Japanese want to intervene. They want to strengthen up their currency and intervene, all right? If they do that, we may see some bearish action, and we're right in a place right now whereby that bearish action, that bearish energy is now we're thinking to ourselves, because we're in a premium. Now, though we will be trading against the bigger trend if we was to get in for a sell, we are right up against this real premium level. Now, yes, and once again, these are just lines I've drawn on my screen. All right, they are not millimeter perfect. They're not, oh yeah, when it touches the line, I'm going to hit the button. All right, that's not how it goes. This is an area of interest, but I'll tell you something. It's making me understand and see that this market is within this yellow range, unless it's going to start going to a different range once we get back to this green range. It's in a real premium, and there's a possibility, all right, that this market wants to come down this direction. So I'm watching it and I can see some things in here. Let's zoom in, all right? Let's zoom in. I've got some, delete some bits and pieces. Right, I want to identify the different sessions, which I'm going to do. All right, I'm going to identify some of the different sessions. All right, let me delete some stuff in here. Delete some stuff in here. Delete some stuff in here. Delete this. Delete some random lines I can see in here, and some dots and some squiggles. Let's delete it. Let's clean it all up. All right. That the market has come up to this level up in here, made this high over here, this green high over. If you can't see it, let me try and zoom in a bit. On a 4-hour time frame, made some relative equal highs, but let me identify the first one that really I can see. This one here, okay. And then we've seen the market go sideways, making again this relative high over here. Now, if I drop my time frame, it's going to look very sideways. If I go to my hour time frame, look at it, trading nicely within that little yellow box. Yeah, trading nicely within that little yellow box. Maybe even if I do that, like so. Okay, and then we made this little wick over here, and then this candle didn't close below this wick, and this candle just about closed over here. All right, but didn't correct and continue. It just corrected and pushed all the way back up to these levels in here. Now I believe, that there is some liquidity sitting above these levels. I believe that even if this market wants to go down, it may first grab this liquidity. So all I want to do with this particular market is I want to place an alert on this line here, that when the market breaks through that alert, I'm going to be seeing the price action. Does it indicate correct and continue? Breaking structure wanting to come down and be bearish after grabbing the liquidity. All right. Now I'm also going to do some research fundamentally to be able to see whether or not this market has any catalysts or any scheduled catalysts, as in fundamental news, that may make that market get very volatile and spike up in that area. Well, today, not so much. Okay. Tomorrow, not so much. We've got Fed Powell's speech on Wednesday. Okay. And we've got BP stuff happening. We've got some US news on Thursday. Got a lot of stuff happening in China. There's not no obvious jump out, stand out Japanese yen news. And from a Euro's perspective, well, obviously there's stuff happening in the Euro. Well, not any red folder stuff, but we do have some orange. Well, we have some Euro stuff here coming out of Germany, retail sales. But obviously, Euro is, it's still victim to USD news, Euro JPY. Remember, USD is the reserve currency of the world, and therefore it is very impactful So what I got to do is, as there's not no obvious standout scheduled news, I'm going to go and check general news if there's some stuff happening in regards to Japanese, some stuff that maybe not scheduled, you know. You know, is there some financial stuff going on that I don't really know? You know, we can go and have a look. This is how we can do our research if who's looking to. We can go and look to see if there's anything coming up, any scheduled stuff, any events happening. You know, what is the current economic situation in Japan? We can go and learn get some education here. We can come to some sort of fundamental bias of what may or may not be happening, all right, in that part of the world, okay? Probably include China also, all right? But either way, personally, guys, I'm looking at this market. I've got my alert on this blue line. And from a technical perspective, I want to see this nam broken, and then to see some lovely break of structure on a decent time frame. Decent meaning 15-minute or 5-minute time frame. If I see it on a 1-minute time frame, let me show you the problem with me seeing it on a 1-minute time frame. Is if I go to a 1-minute time frame, I may have seen this market previously, breaking structure on a 1-minute time frame bullishly and not continue it. So I can't trust the 1-minute time frame indication correction continuation. I'm actually looking for it and actually can't see it, to be fair. All right. So I want a decent time frame, one that's not going to be get caught up in some small volatilities. All right. I want it to be definitive. So 5 to 50-minute time frame. The larger the time frame, the safer you are. The larger, but the larger your stop loss possibly can be if you're not placing it over the swing high. So this market comes up here like this and does this on a 1-minute time frame, but on a 5-minute time frame, it's just a wick going up, and then decides to start doing that. You might think to yourself, okay, cool. That's a 1-minute closure below there, indication correction continuation. But on a 5-minute time frame, that was just a wick. The candle came back down here, closed down here, but the next candle decided to push back up here, stopping you out. And you're like, oh my gosh, how did I get stopped out of there? You got stopped out because you got in too early. Imagine this is like a boat. This boat is turning. Yeah, or it's doing a 3-point turn, constantly going back, forward, before it turns and decides to go in this direction. You don't want to get caught up in that 3-point turn, saying, yeah, it's ready to go now. It's not ready to go now. It's going to go back and forward again, stop you out. Then back and forward again, stop you out. Then back and forward again, stop you out. Might even go sideways for a little bit because the guy's knackered. He's knackered doing that U-turn. Might go sideways a little bit. And then when he's ready, start seeing this happening. Only after 15 minutes or an hour and a half. Or 2 hours. But in the 1 minute, when the guy was over here and turned around, you thought, yep, I'm ready to go. This was you over here. He was like, yep, here we go. And then it went doing, and then he still continued doing his 3-point turn. Oh, stopped you out. And then he started going again, but he wasn't quite ready, stopped you out. Because this is on a smaller time frame. This is why and this is where the patience comes into play. Because every fiber of your body doesn't want to miss this trade. Oh, I don't want to miss it. The FOMO, fear of missing out. But on a larger time frame, when you zoom out and just be calm and you see a lovely break of structure on your 15-minute time frame, or like that, breaking structure clean, and you place your stop either above the last high or even safer than that, all the way above the swing high. Yes, your lot size would be smaller because your distance to your stop loss is greater, but this is going to be a lot safer trade. That when you're in this trade and the market starts coming down here, please, overlook my scribbles. I'm drawing on top of each other. Market starts coming down here in profits and then kicks all the way back up in here for whatever reason. And then when it gets to here, you're only halfway in what you're willing to lose. So if you're willing to lose $100, you're only minus $50 here. You're calm. And then you see the market doing this and doing certain things and you're like, wow. Yeah. I want you guys to trade from a perspective that is, you can repeat it. You can scale it up. You can repeat the things that you've done, and you have a greater, level of control over your trading. You're not very anxious. You're not constantly sitting there looking at your charts. You're not placing a trade and 3 seconds later you've been stopped out. You shouldn't be placing a trade and 3 seconds later you've been stopped out. That means your stop's just far too small. You should be able to place a trade and watch that trade play out. Okay, so that's my outlook for EJ. I'm interested in this trade. Why? Because we are right up against the premium. You might hear people turn around and say overbought. This market is extremely overbought. There's lots of indicators you can have that show you when markets are overbought. Let me think of one right now that we can put on there. There's one that I used to use. And you will see that the line will be very, very high up. Let me see if I can remember which one I can use. Trying to see if I remember. There was a good one. I can't remember what it was called. I need to see it to remember it. I need to see it to remember it. I need to see it to remember it. Come on, jump out at me. It's not jumping out at me at the moment. No, it's not you. I want a good one. I mean, I know it's one of the RSIs, but I'm just trying to think which one it was. I'm sure it should have been. Let's just try and see what one of these are saying. There you go. I don't know how great this is, but an RSI normally identifies two levels. Sometimes you have it 80 and 20. This one looks like it's 30 and 70. And when this market is up in this anything above this 70 level, I hope you can see this. I'm showing you something as an indicator for RSI, it's Relative Strength Index. That's what it stands for, okay? And if you can see in here, we were looking at this little thing here. We're looking at this section here. Let me try and make it bigger. We're looking at this. Now, you might be like, oh, my, here we go. We're going into some new kind of indicators. It's all complicated. It's not complicated. This is ultimately showing you when the markets are within a range, just let me know. Look at this yellow range. And when we're at the top, look at how it aligns. Let me show you something. Just to show you how you don't need indicators, how pure market structure and price action, it does work for you. Look, if I've told you that this line, you see this line here where it says 70, let me put a line on it so you can actually see it visually. This area here, how, and let me put it as a red line, is going to be when the market's overbought. And this line over here, I'm going to make it a green line, is going to be when it's oversold. Have a look at something. Every time here, we're at the top where it's overbought, I want you to look up here in our actual market. It's just the one that I just drew some lines on. Yeah, have a look. Every time we're up above this red line or at this red line, where are we? When we look at the chart here, where are we? Where are we? Top of the range, premium. See it? Yeah. Have a look over here. Every time we're coming up here, we're at this 70 line. In this instance, they use 70 premium. And here, this one's not as great because it didn't get all the way down into these levels here, but discount. All right. This thing, I don't exactly know how this. Oh, tell a lie. I know how it's working now. Look, this has a different one for the time frames, which is quite good. All right. Shows what, the time within the different time frames. Okay, I get it. All right. This one's actually time frame sensitive. But you can see, look at here, when we're all the way up here, look where we are in the range, all the way up here in a real premium. And from those levels, when this indicator, what it's showing you is when we get up past these red lines, you're looking for sells. This here, look over here, when you get up past this red line, you're looking for sells. And if you did, you'd be selling. Right, look at it right now. We're all the way up in here. Ultimately, we're looking for sells. The only reason this hasn't started going red and doing outside is because we haven't got the market hasn't broken yet. But it's the same principle, showing you overbought and oversold. We was able to do this just by drawing our ranging. Just by drawing our ranging, we were able to do everything that this indicator was doing. So this is when you hear people tell me, I don't need indicators, because indicators are lagging. Indicators are behind price. The indicator is only being able to indicate based upon what the price does. So just why not learn how to read price instead of reading the indicator? Yeah. But right here, you can see just based upon historics, every time this market gets up into these levels, selling, coming down here. Into these levels over here, selling, coming down here. Into these levels over here, selling, coming down here. Into these levels over here, selling over here. Into these levels, look, over here when this market was coming up into these levels, selling. All right? When it was on the bigger range, when we was touching this bigger range over here, where I drew this green line, look, where I drew this green line, which would be a premium area. What when we got into those levels? Selling. You see it? When it's doing this, nowhere near this level, just dancing around, we're not doing jack squat. Because this would have been just the market mucking about, ramping. It's ramping in here. I'm not going to get into a trade here. Yeah, we are in a premium section, I suppose, quarter, but just kind of ramping here. Look how the indicator, the relative strength index, is not showing any relative strength in either direction. But when it gets up past these levels here, this red line and this green line, like right now, we are ready to play ball in this EJ section for the sell. So that's where my energy is. If it doesn't, this has to push all the way up here, well, cool. This is what it is. But if I see an indication, correction, and continuation sellish, I'm selling the living daylights out of EJ. And though it is against the larger trend, that is where we are. Okay, that is where we are of things. Let me try and use this RSI again on another pair. Let's look at this RSI on US 30 real quick. All right. Okay. So we're going to go first and foremost, let's minimize this screen here. And let's go and have a look at our US 30, which I haven't been liking. All right. Haven't been liking it. All right. Just we're kind of in the middle. We're not at the top of this white range. We're not, actually, let's not use US 30. So this is it. All right. So let's have a look at gold. Let's have a look at gold. Just zoom all the way out and see what gold is doing. And then we're going to look at it via the strength index. I think also gold is another one which it's a little bit in the middle of a range, but let's have a look. We're zooming all the way out. I'm on my monthly. I'm going all the way back to 2000. All right. I'm going to draw some lines from bottom, touching some of these bottom areas here. Boom, boom, boom. Okay. Here's the top of that range. Going right to this top point over here. So, even though we've seen some narrowing of that range in here, can you see? That was a range at one point. So we're in like near the top-ish of this narrow range, but near the bottom of this bigger range. Now let's see what the RSI is saying, looking at it from all the way this distance up. Let's click here. Oh, is it still there somewhere? Yeah, here we go. Now you can see similarly here, look. So the RSI is taking into consideration this narrow range, you see? And when we get up into these levels here, you can see the market is over this line and it's sell, it wants to sell. The bottom end of this range for the buy area is not as compelling, but I don't know whether that's because of time frame. Let's check. This is gonna change when I change the time frame. Yeah, it does change. Okay, so now I've changed down to my 4 hour. If I try and hide this, and try and reset this. Where's the reset button? I'm trying to hide this. There's the reset tool. Like so. So I'm on a 4 hour time frame. I don't know, I've got some extra dots happening there from the indicator. But I'm just trying to show you that this indicator is just showing that down here we're interested in sells. Can you see? Sells. And when we get up into these levels here, we're interested in buyers, sorry, I'm interested in sells over here. Now, does that mean that you want to use the RSI? Maybe this, what I've just shown you here makes it easier for you than the range. Maybe you're somebody who, when you draw the range, you're not too sure. And for that reason, you want to start using an indicator. Maybe. But I have shown you that you don't need to. Yeah, you do not need to do that. Okay. Right now, this current space where we are, we're kind of in the middle of this white range. So I don't love it. I don't love being in the middle of any range. Yeah, obviously this is the monthly, and therefore in a smaller range, looking something like maybe like this. Have a look. The smaller range, looking like this, is potentially put us at the top of this smaller range. Just go down on a daily. See the markets come to the top of that range and then started to think about it. Look, it was making higher highs and higher lows and higher highs and higher lows. Then it got to the top of that range in a premium and it started to go sideways. Started thinking about it like, I'm just not too sure. Let's go sideways in here. Okay. And now that market could continue going sideways until it gets closer to the discount and then decides to go bullish again. It could do. But at the moment, this market is trading within this range. All right, have a look. Even within this range, the RSI is giving us some information Because at the top of the ranges, have a look. Where are we? We're at the top all the way past this 80 line, saying sells. And at the bottom of this range, we're closer to this 30 line, saying buys. So the relative strength index is just showing where that strength potentially bullish or bearish is. Yeah. But remember, indicators, don't look at this indicator like, oh, wow, yeah, I need that indicator, because the indicator is only doing it after the price tells it what's going on. It's not doing it. It might have some level of prediction, but ultimately something changes and all of a sudden this market starts coming down here and doing something else. This indicator will change. The indicator is not driving price. Price is driving the indicator. Let me say that again. Indicator is not driving price. Price is driving the indicator. Okay. Okay. Let's go and look at some other markets. All right. Now, let's have a look at this gold for now. We're in this gold. We're going sideways from the top, from the premium. If I get rid of some of these lines, you know, I'm going to be thinking to myself that gold wants to sell off from this top area, but I'm always going to be very, very dubious and waiting for confirmations, because gold may always want to decide to break outside of this range. Remember, the markets do what it's always done until they decide to do something else. All right. So maybe this market here is still trading within that white range, going to come down in here, boom, going to push up in here, boom, maybe come back in down here, boom, maybe push back in here, boom, and then decide maybe wants to start selling off. Maybe. All right. So that's giving me a bias in the back of my mind. If I'm in here for the buy, then when I start getting up into these levels, this market might want to turn around. So I should take my profits. Or vice versa, if I turn my back and on Tuesday and Wednesday we're all the way up in here, I'm thinking to myself, okay, maybe sell opportunities. But I'm always concerned the market might want to spike up first, take some liquidity from above this level in here. All right. I think maybe we're quite safe for that. And I'm thinking to myself, maybe more, the market might just turn around here. Maybe. All right. At the moment, on a smaller time frame, going down to my hour, maybe this gold is going to make a little retracement, which it has been doing from the top of our range, yeah, from the premium of this range. And it's going to come down into here, maybe tap into some sort of imbalances, tap into some sort of areas, have a look. Over here, we can see an imbalance all the way down here. I don't know what these other indicators are that's lighting up my screen. All right, I was just showing you guys that other indicator. I'm going to take it off now because it's active. But understand the relative strength index. That is what it's doing. It's showing us when there's relative strength for a sell or for a buy. Yeah, you can test it yourself if you want to use an indicator and you think it's going to be good. All right, but ultimately, price is driving the indicator. It's not predicting the future. Okay, so here's an imbalance here on the 1 hour time frame. I would add that in there to say it's a 1 hour imbalance, so I know. Because you can also see in other time frames, for argument's sake, the market's just come and closed a 4 hour imbalance, which was above. This is also a 4 hour imbalance, so I would do 1 hour / 4 hour. So I know what that's covering, that imbalance. Now, right now, the market's just closed a 4 hour and 1 hour imbalance, and it might decide it doesn't want to come down here, it wants to turn around now. Maybe it's happy with closing that imbalance and it wants to turn around now. I do not know. Either way, I can put in some data points like so, and I can read and react to what the market does. If I drop down to my 5 minute time frame, you said this market pinged, ponged, pinged. Are we ponging right now? Is this market going to close this little imbalance that is in here and decide it wants to turn around and pong? I don't know, but I can't get in for the buy until I get that confirmation. And on the gold, 5 minute is small enough for me to see some confirmations. And even then, when I get that confirmation, this market really price has got to break outside this market. I can't, if I get an indication correction continuation, we're up here, but we're in a premium again. But I'm thinking to myself, we could slap the ceiling here and come down. So really, I want to see it indicate correct and start coming out in here. And then I can decide to take a lovely trade from here, placing my stop below here on the basis that maybe this market's going to trade up to the top of that range. Yeah, if it goes past the yippee-ki-yay, but the reality is it's trading within a range, and that would be a premium. And if it started pushing up there, you'd see this relative strength index be all up here at the 70s, saying that, you know, here's an area that maybe the market wants to sell from. Okay, let me get rid of this. I don't want it to confuse you guys or make you think somehow it's predicting the future, because it's not. It's just reacting to the price, but it can react to the price in milliseconds, whereas you're going to see it like, oh, look, the indicator said that it was going to go down. No, the indicator reacted to the price that happened 2 milliseconds ago. Yeah, happened quicker than your eyes could take in the information. All right. So there you go. So what I'll do here, for argument's sake, I'll pop a little alert in above this little retracement, this little high. And I'll also pop an alert down here if this market's going into this 1 hour imbalance. Now, I like to see imbalances and then zoom down and see the imbalances within the imbalances. That's what I do like to do. Okay, so what do I mean by that? I mean, like, this is a 1 hour, 4 hour imbalance, but is there a smaller imbalance or area, point of interest within this area? Well, I can see a candlestick zone, which is a wall here on the 5-minute time frame. And I like to identify that little area here, from here to at the bottom of that candle wick. So if the market is going for that imbalance, this may be the wall that turns it around, that's sitting within the imbalance. Yeah. So that may mean that this market may decide to do a little hokey cokey in here for a little while. Who knows? Like, say, for example, right now, there was an imbalance in here that was on our, I can't remember what time frame it was. This big imbalance, it was in here like this before. It was in here like this before, but we can see the market's come down in there, close this imbalance completely, where now I can delete it, but it's closed this imbalance and it's tapped into a candlestick zone here on the 5-minute time frame between here and here. It's tapped into that level. That may be the level, the wall it needs to bounce back up here to this range. But I'm not going to get excited and hit buy above here, because it hasn't broken the 5-minute structure clearly that I can see here, and we're still trading within this range. So the patience is going to have me wait until this market does that. Yeah, breaking structure above here and here, correcting and continuing. Then I'm like, okay, let's go. I do have an option here. I can place my stop here below the last low, which is higher risk, or I can place the stop here below the swing low, which is lower risk. That is my options that are available to me. But at least at that point in time, I'm like, okay, this market's doing something different, and hopefully it's trading up to the top of a range. And the top of the range is just coinciding with higher time frame structure. Okay, you know, here on the 1 hour, this would be some structure, it breaking this high. Okay, so I could trade to that high. That could be my target, trading to that high. Okay, that's my first place where I want to take some profits. If I look back historically, so I'm looking back here, I'm looking for other points of interest. For example, this whole imbalance would be an interest of this market potentially coming and closing up this imbalance. Yeah, when it comes and closes up this imbalance, I have to look at the structure that's behind the imbalance. You see that this wick here, on a 4 hour, this is a wick, but on a smaller time frame, the market previously had problems breaking that level. Have a look at this. The markets previously had problems when the markets come down, indication, boom, breaking this level. So this is still a point of interest. This is like a historic war ground, battlefield over here. Just like over here is a historical battlefield, because the market came down here and boom, couldn't break down here, pushed up here. The market came down here, boom, break down here. All right. So when I'm looking, if I got into a trade, not so much these lines. Say I made a mistake because I've rewound it. So let's get rid of these. This is wrong. Apologies. It's because I didn't know where we are. So we're here, and I meant here is a historical battleground below this low here. Okay, these are all points of interest. So if I'm in the trade and we get to this level and we break through here and we're pushing up, I'm going to be looking like I want to be moving my stop, protecting myself, taking some profits, or anticipating that maybe this market decides that this previous battleground is an area whereby it wants to get in. It's a good area that we want to sell from, this previous battleground. We sold from here before, but it was a historical battlefield that we had to break through. We had to break through this level to sell from here. We had to break through this level over here. Understand what I'm saying, guys? We had to break through this level over here to sell. There was a battlefield here. We had to break through that green dot. So when we come back up here, we might respect that, boy, this was the battlefield, yo. Yeah, we're good up here. We've done our work. We might see that kind of energy happening from this. Therefore, if I'm in a trade, I am understanding that we've already hit some structure, market structure, some highs, and I want to protect myself or take my profits once I start seeing something, especially as we're trading into this premium area. Let me go and look at another pair real quick. Let's look at Bitcoin, BTC USD, CWA Quan. All right, now this is some previous markup in here, and I was saying that Bitcoin's in a trading within this range, but this potentially is the bottom of a range where we might see buyers coming in around here. So I was saying, look how the market's been traded within this box. Ping, pong, pinged, and pushed out of here. Look, boom. Pushed out of here. Potential indication, but is it an indication? Because we're getting our correction here. But are we getting our continuation? We don't know yet. This could have just been a nam liquidity grab. Then it's come up here, boom, 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 boom. And now we want to, from this area of demand, this green area, now the market wants to start running it up. So even here, I'm still just don't know what we want to do at this moment, because yes, we've indicated outside of this yellow box, but we've retraced all the way back up here to this equal high. So we haven't violated structure, but we've come all the way back down here. We haven't come down here and closed below, giving us an indication, correction, continuation. We've just got an indication, correction, and not too sure. We're in here. You see? So really right now on a higher time frame, i.e. 4-hour time frame, we don't know what this market wants to do. On a smaller time frame, if we want to take a punt and we think the market's going to actually start pushing up from here, we could look for a smaller entry in here as the market indicates, corrects, and continues. Well, I want to go from a 4-hour, drop all the way down to my 15 or even my 5-minute time frame. And we could be looking in there, thinking to ourselves that this market's not going to break. If that's what we believe, we don't have a 4-hour higher time frame confirmation. But if we believe that the market's going to start pushing up from here, we could be looking on a smaller time frame for our indication, correction, and continuation, which at the moment on a 5-minute time frame is even quite difficult to see structure. Over here, we can see structure, and only now-ish, we've got an indication that's broken that 5-minute structure of this little swing high. Only here. So this market could decide it wants to come all the way back down in here before deciding it wants to do something. Could do. All right, could do. Yes, we've got a little bit of structure in here, to be fair, but even that, you'd still be looking at it like, below our stop below the swing low. And these little wicks of volatility should let you know that you want to place your stop below the swing low. Placing it too tight, these little wicks of volatility may get you. Yeah? So at the moment, we're looking at this little market here, Bitcoin, and we're thinking to ourselves, boy, is this Bitcoin going to continue pushing up to break structure, or is it actually just kicking back here to correct and close up? But look at it on the larger time frame again. If it's not making too much sense, look. The market came down here, pushed right into our demand area. Boom, wick down here, captured liquidity. Now, and then it corrected below this orange box, below breaking outside here, and below this structure. And now this is the continuation, or is it? Is this going to come and close down below here, or is it not? Because this is the liquidity grab for it to now start going up. And like I said, you could take a punt and say, you know what, I want to get in early for the buy down here on a smaller time frame. As this market comes up here, starts taking all of this liquidity above these levels and breaking structure. Or you could wait to see whether or not the market is going to close above here, close above here, or close below here. It's down to you. All right, but that market hasn't done anything that we didn't think it was going to go and do. Have a look on a larger time frame. The market's been trading up within this impulse, but at the bottom of this impulse, there's liquidity sitting above these relative equal highs. Is this market going to push up there and grab that liquidity is the question. I hope you understand that. I understand. It's very clear to me. Yeah, I'm not saying that I know what it's going to go and do. I'm saying that the plan is very clear to me. Because this market could be deciding that it wants to come and get back down to this yellow line before pushing up. Because that would still be on a bigger picture from this low here, on this discount, higher high, higher low, higher high, coming all the way down here, could still be a higher low to continue making a higher high. See it? That's the bigger picture view. Even if the market starts coming down here, because oh, Bitcoin's going to hell, still making a higher, still could make a higher low over here, which is still bullish energy on a larger time frame. You see? So there's nothing to stop it coming down here, especially because the market, unfortunately, It's in the middle of a range. And in the middle of the range, it's capable of doing whatever it wants to do. Look at it before. Came to the middle of the range before. Have a look. And just decided, yeah, I'm going to go back down here. And then it came to the middle of the range before and decided, yeah, I want to go up here. From the middle of the range, the market can do whatever it wants to do. You see? So that's why it's a little bit iffy there as well. Any questiones, guys? Any questions? Any questions? Any questions? Good. All right.
I was just going to ask, what's your analysis of the overall crypto market at the moment?
I think that the crypto market, from all the things I've been reading and watching, is positioning itself to carve out, a few big players, all right? And meaning that we've seen some of the big institutions buying into certain crypto coins, doing certain things, okay? However, in the meantime, regulation and things like that can give it an opportunity. Like, I see fundamental news as catalyst to allow the markets to kind of like clear the air, clear their books. Yeah, whenever there's some news going on, the market can do a madness and clear the books, wick some people out, do a madness. Yeah. And crypto is quite sensitive right now to fundamentals in regards to if we hear that this SEC are going to be coming down hard on this, or if we hear that this crypto exchange is getting prosecuted for that, or if we hear something else is happening. But when that smoke clears, crypto is going to move and continue to push up because institutions understand that digital currencies are the future. So if you was a big institution, you're looking at some of these big boys. You're looking at your Polygons, you're looking at your Ethereums, you're looking at your Bitcoin, you're looking at your certain areas of where would you sink your investors' dough? Because your investors want to be part of this crypto world. They don't give a damn about the assets. They want to make money. So on that basis, it's like, cool, but your average big, massive, hedge fund, they're not going to slam their money into some mad coin made in their bedroom by some kids in their underpants. They're just not going to do that. Yeah, but they will slam their money in things that are more robust, things that have utility, things that have a good team, things that have a plan, things that they can speak to themselves. It's not just another asset class, another something that they can trade in. So in my opinion, Bitcoin is the gold standard. It is the Gucci. All right. The opportunities, in my opinion, don't necessarily sit in Bitcoin if you're investing, but the stability does. Yeah. The potential savings account could be Bitcoin. Where the opportunities are going to lie is in the smaller alternative coins that have utility. What does that mean? That means that they actually do something. They're not just some random Dogecoin madness. That Doge is an exception to the rule because Elon Musk got involved and blah 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 and blah 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 and blah blah blah. But the average coin that does nothing, that has nothing going on for it apart from hype, I can't see institutions slamming huge amounts of money into them. But I can see institutions slamming money against these coins that have utility, have their own ecosystem, building around it. Your Ethereums, your Polygons, your this, your ICPs. I can see money going into these coins that is going to give opportunity for growth because the market cap is quite small. You want one that's small. That is Bitcoin going to go to 1 million and do a 10x from where we currently are right now, or 800,000. Probably not. Not anytime soon. Can Bitcoin go from 80,000 to 100,000? Yes. As an investor, safe. You can, as a trader, you might as well look at a Bitcoin like a gold, like having the volatility of a gold to give you that speed, because it moves with speed on a smaller time frame and has volatility like a gold. So it's just another asset class. It's just like another gold, another market. Yeah, but if you're investing, guys, and you got some money, I want to put some money somewhere. Bitcoin is a slow burner. Like can you go on? Are you in a position that you can own a whole Bitcoin? No, but you might be able to own a whole Polygon coin or another coin or an alternative coin. You might be able to own hundreds of those coins. Yeah. So if you believe, for example, if you start seeing that the crypto market starts to fall and go to hell, but you've been watching a project that you believe in, it's well funded, it's got good management, good team, there is still great opportunities for you to get into these alternative coins that are gonna 10x, 50x, 100x. That's not gonna be Bitcoin, but it can be the alternative coins. So when you're going and doing your research, you're going to be researching, let's just slap it in Google for argument's sake, all right? You're going to be slapping in here, top 20 alternative or altcoins, probably going to bring me up a better results. Okay, altcoin list top 50. All right, or the top 10 altcoins of July. Let's have a look what this little article is saying. Remember, when it comes to these articles, you can't just take one of them as gospel, because the guy who's at the top or the guy who's second or third could have written the article. Okay, you have to do research. At least look at 3 articles to do research. Let me say that again. When you're doing your research, you cannot take one source of information. Especially nowadays, everything is disinformation. But have a look. ETH, what I just said, your Ethereum, understand that they've got their own kind of ecosystem. People build on ETH, all right? BNB, Solana is what I was supposed to be saying. I was crazy. Solana. If you know about lots of altcoins and shit coins, meme coins that was being built on Solana. Okay. XRP, Ripple, this is. Yeah. Doge, obviously, this is our anomaly. We've got in here Toncoin. See, this is what you find is maybe the guys who wrote this article, this is what they're trying to push. Maybe. Yeah? Because if you're like, never heard of this coin before, what they've done is they just put Toncoin in the mix of Cardano, Solana, Ripple, and Bitcoin. All of a sudden, it gives Toncoin some weight. That's why you have to do your research. If you keep seeing Toncoin, for example, coming up across multiple resources, then maybe it is a player. But if you just see a random, like, where did Toncoin come from? Ripple's always in there, Doge is always in there, Solana's always in there, but all of a sudden there's some new random one. I'd say take that with a pinch of seasoning, that somebody's trying to season up this coin. But Cardano, you've heard of Cardano. These are Shiba Inu, you heard of SHIB. Yeah? Avalanche, you should have heard of Avalanche. Tron, you should have heard of Tron. These coins, I've got interests in a lot of these coins in my portfolio. Polkadot, you might have heard of Polkadot. These will present you more opportunities for growth over a BTC. Bitcoin don't even make this list because these are the alternative coins, the altcoins. Bitcoin is the Premier League coin, all right? And these altcoins are Division 1. All right. So yeah, my outlook for cryptos is that the future is the digital currencies, guys. Man can fight it all day long, but more and more, I've never got money in my pockets, fiat money. More and more, I don't have pieces of paper in my pocket. More and more, we're moving to a digital space. This digital space is control. Yeah. When you've got money in your pocket, you can do certain things. Yeah. That one time you forget your phone dies and you've been using your phone to beep, 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 beep. When your phone dies, you're screwed. When you've got physical money in your pocket, you can always navigate. You can always be able to whip out a 5 or 10 or 50 pound and get what you want, whether that's food, travel, this, that, and the other. And that's a physical fiat asset. Something you can hold. But the world is moving away from that and moving to digital. So therefore, if your life is digital on your phone, what if I block you out your phone? What if I'm a hacker and I can block you out of your digital devices? I've not only just annoyed you that you can't go on Facebook and Instagram, I've stopped you from eating food. So the digital, if you just think of it just like that, if you as the powers that be, and this is how you got to look at things, guys. You got to look at it like this. It's easy to turn around and say, oh yeah, the Illuminati doing this, the New World Order, the powers that be, the people that control it. Okay, cool, blah, blah, blah. You have to look at things like, if you was them, let's imagine today, Jivan, was able to I made you billions of pounds. You're a billionaire. Now, after you go buy a new car, take 2 holidays, buy a nice house, maybe set up mumsy and a couple family members, This shit's boring to you now. You've done everything. You've got money. You're not going to be waking up tomorrow and like, I just can't wait to make another 10 billion. Maybe if you're that way inclined, because you're just like really business minded, but you may start waking up with having other interests. Like, you know what? How can I change the world and mold the world to what I want it to be like? Whether that's going to be good intentions or nefarious intentions. You're going to turn around and start saying stuff like, you've heard this conversation, right? The world's overpopulated. They want to kill off a certain percentage of people for the world to stay. You've heard that conversation, right? Now, to a lot of people, that sounds like, oh, these people are demons. Like they just want to kill off, they want to kill off a certain part of the population. They're going to do it with COVID. They're going to do it with wars. But there is a part, if you really get deep on it, there's a part that is like the Thanos story. Yeah, who knows the Thanos story? Yeah, someone knows the Thanos story, right? From what do they call it again? It's not. I was gonna say X-Men. It's not X-Men. Yeah, what's it called again?
X-Men, it's Marvel, bro.
Marvel. Yeah, you know the Thanos story. Thanos is a powerful. Let's see for the people that don't know what I'm talking about. Yeah, for the people at home. All right, Thanos is a very powerful homeboy that's out here to punch up the place and ultimately to flick his fingers after he gets all of the stones. Yeah, the Infinity Stones, and clear out some of the population.
50%.
Say again?
Half the population.
Half the population. Because he's just saying that he's willing to do the greater evil for the great, or do the evil for the greater good. Do you understand what I'm saying? Yeah. So this whole energy, if you really thought about it and you was making this kind of dough, that might be your agenda. You might be thinking to yourself, you know what? You want a world for your kids and your kids' kids and your kids' kids' kids, where it's not going to be resources are mad and it's overpopulated and the world. You might love the world more than you love yourself, or more than you love, the people that live on your street. You might love the world some more than that. Yeah. And if you love the world more than that, then you might be like, you know what? We need a disease. We need a little COVID-19. We need a war. Yeah, I know you're annoyed about the war right now, but I'm looking at the greater good. You're in a position whereby money and making money is not what you're into, and you want to shape the world. So coming back to the narrative, digital currencies and the control of people, the control of the movement of people, the control of what you're going to buy and how you spend is part of that control that the higher people that are not concerned about going 9 to 5 and I just want to go out to the rave on the weekend, and that they've got different goals. I'm not gonna say bigger goals, just different goals. Yeah, whether you're gonna call that demonic, whether you're gonna call that whatever it may be, but they're just on some different stuff. You're just on, I just want to make a certain amount of money so that I can go and build a house back home and help my people, build a school back home and go and help my country, help Dominica, go build a nice school and a nice road. That's your plans. But they're like, listen, I can't wait till we get to the point where we've got these digital currencies on the lock and we can just prevent people from being able to spend money outside of a certain area. You heard about these concepts have been coming in, the 15-minute cities, you can't travel to a certain area, the electric cars. Like, don't get twisted. Don't think that Tesla man can't just decide to just turn off your car anytime it feels like it. Just lock it off because it's controlled digitally. It gets an update from a central location. I watched a film. It was some kind of utopian, dystopian film in the future, and where all the technology was like taken over by some sort of AI thing. And they had a scene where all the Teslas were just driving down the motorway and crashing into each other. Teslas were just wetting down the motorway without nobody driving it, just crashing into each other, because they were under control, under central control. That guy who has an old school car that's not digital, takes diesel and runs by combustion. Nothing can't take over his car and he's rolling around. It's the same with this currency situation. And like I said to you, the world is going that way. They want it to be digital. They just want to do it on their time. Do you understand what I'm saying? Because there's so much other infrastructure around fiat currency and the Great British Pound or the United States dollar. They want to be in a position of control that when it gets to that digital space, they're in control of that digital space. It ain't Jason's just sending me 100 million straight to my wallet and they don't know about it. and they can't tax it, and they don't want that. So if you're looking at it from that perspective, who potentially going to be the players that are going to emerge out of that space? And there's research you can do. And it might not be this today, you're going to become a multi-gazillionaire because you've invested in them. Yeah. And a lot of these altcoins are already quite big market cap already. But there are going to be some smaller emerging markets, trust me. And digital spaces and tokenization of real world assets and things like that, let me tell you something, is the future. Is the future. So if you're thinking about projects, you're thinking about whatever ideas you have, concepts, you need to be thinking to yourself about how you can take advantage of the blockchain and Web3 technology and AI and incorporating in what you're doing, because it is the future. It's like somebody turning around and saying back in the day, bro, you're not going to have money for too long, you know, soon everyone's going to have cards and they're going to be tapping cards. And you're going, no, that would never happen. Can you remember a time when we were saying about you could just tap your card? It was mad. It sounded mad. Well, just tap your card and take money off. That's not going to be very safe. How many people are saying that's not very safe? The fraudsters are going to have a field day. Well, now you can tap out. So you can tap out £200. I think I could tap out £200 on my card, £100 on my card, something mad like that. Somehow they've worked it out that they don't give a damn about the fraudsters. Somehow things are happening, but now a lot of people can't imagine.
It's unlimited, bro.
No, I don't think it's unlimited.
It is with Apple Pay.
Is it?
There's no
There you
limit,
go.
bro.
There you go. Do you understand what I'm saying? So on that basis, think about it. That's not a long time ago. It wasn't a long time ago when man wasn't tapping nothing. How long ago? How long ago was man tapping? What are we saying? What? 5 years? 6? I don't know.
Yeah, between 5-8 years.
Yeah. Wasn't that long ago when there was no tapping. So if I'm saying to you, family members that are out here that have got business ideas, that have got, you know, things to think about, that you have to look at what's happening right now and be on the buzzer of what's happening in the future. Have your finger on the pulse of what's happening in the future. You've got to be future proof. Yeah. All the man them, let me tell you something right now. You see all the man them with cash right now. Millions under the bed. It's a problem. All they're trying to do right now, take it from me, is trying to get it digital, get it into the system somehow. Because more and more you can't spend cash. Man don't want to see cash again. You think you can walk up in a car showroom with cash and say you're going to buy a car? You could do it once upon a time. Can't walk up in a showroom like that. There's 40 grand, I want to buy this car. Man are going to look at you mad. Mental. They're actually you're going to straight away trigger an alert. No one wants cash. Everything to do with cash is a cost. I've got to count cash. I bring 40 grand to buy the car. Somebody's got to go in the back. I've got to put Leroy in the back to count 40 grand. Leroy's also got to look at every single note to make sure it's real. It's real. It's real. Then after I've got that 40 grand, I've got to pay somebody, the Securico company, to come and pick up that cash, to take that cash to the bank, for them to count it again, to make sure it's correct. Yeah. For them to go and put it into the system, all for it to get to be digital anyway. So think about all the nonsense that happened with cash, just for it to get to a digital space anyway, so I can show up in my bank account as a number. So if you're looking at it like that, cash is obsolete, bro. Cash is inefficient. So if everything's going digital and we're talking about digital currencies, well, then that must be the future. So when you explain it in this logical way, and people are like, yeah, that crypto stuff, I don't understand it, man. I'm like, that's dead, man. Bro, you're mugging yourself. You're not looking at it from a logical perspective. Like people say, yeah, man, gold this and gold that. I get gold, because gold has some real world utility. It does. But what about diamonds? Why do we love diamonds so much? Why do we love diamonds so much? Does anybody know? Does anybody know, as grown adults on the phone call, why we love diamonds so much? There are some reasons. There is a lot of effort that has to go into mining them and them being produced, so that creates value. They're shiny, but they don't come out the ground shiny, to be fair. All right? But why do we like these stones? Why are those stones more valuable than the stones that are in your back garden? Maybe for the fact that they're so abundant in your back garden. But what happens if tomorrow we find a new stone, which they do? They find new stones, new rocks that are very hard to come by, and they have a lot of value. I heard about a sick one the other day. What's the metal called? One rock, some crazy rock that's got some different kind of properties. It generates its own kind of charge and some stuff like that. Has value. Yeah, we attribute value to things that don't necessarily have value, if you know what I mean. Yeah, we turn around and say, based upon how difficult it is to get these things, they have value. So the point I'm making to you guys is not to say that we're out here changing, we're not swapping food for weapons, or like this, that. Can turn around, come someone and say, this makes sense. You give me food, I'll give you this. You give me water, I'll give you that. We are coming up with little intermediaries, little kind of, things in between to say that it's a store of value. Do you get what I'm saying? And like I said, the digital space, guys, is somewhere where I would always advise right now, your cousins, your kids, let them understand that this is going to be the future so that they're ahead of the curve. Because I'm telling you right now, you see this space, it's crazy, yo. This AI space, this quantum computing, this digital currencies, this Web3, the blockchain space is nuts. The whole industry is chasing the next thing. And these things will land. Do you get what I'm saying? And if you're positioned well, whether you're an investor or whether it's a business opportunity, for example, let me give you a business opportunity right now. You ready for it? Simple ones. You could get your knowledge up in this space and you could create a consultancy, Jordan Consultancy, Jordan Web3 Consulting, Jordan, going and educating and going into businesses and showing them how they can use AI in their business. That's not difficult to do. That's something you could do today. I can pick up the phone today and start phoning businesses and say, we'd like to come and make your company a lot more efficient. What does that mean? That means that when I go to the West Indian shop, I'm able to create her a small interface that allows me to know, or allows the customer to know, when the jerk chicken's running low. And allows me a nice little AI interface that kind of can predict what days I have, more people want oxtail than more people want jerk chicken. So I don't have to keep coming there and they're like, no, we don't have no oxtail. Not to say that I'm eating oxtail, but you know what I'm saying. Or to make it more efficient of how they contact their customers, or whatever it may be, by using some of these technologies. You could do that. When you hear some people tell us like, yeah, I've got a consultancy and blah, 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 that's what they do. They're going into businesses and showing them how you can use this tool and that tool to go and do X or go and do Y. And right now, because technology is emerging, there's always an opportunity that you know something more than somebody else. Do you get what I'm saying? Because right now, if you go into certain opportunities, have you guys ever thought about using or having your own crypto coin, your own coin, tokenizing what you're doing? They're going to say, no way, we've never even thought about it. What's the benefits? And all you got to do is be able to present the benefits to them. Oh, that sounds sick. How much is it going to cost for me to do that? It's going to cost you 15K. And then afterwards, we'll manage it for you for 2K a month. But the potential is you could make X. Why wouldn't they give you the money? Why wouldn't they give you the money? They'll give you the money. But trust me, because it's new emerging industry. Do you get what I'm saying? This is as big. What's happening right now, people don't understand, is as big as when internet first landed. It's as big as the gold rush. It's as big as, when the railroads were coming. It's a new industry. As soon as that man created a train, there was some guy who was like, I'm going to make some money making the tracks. And some guy says, I'm going to make some money making the seats. Someone says, I'm going to make some money making the windows. A whole industry popped up from these new technologies. So you don't have to tell us, yeah, I've got my own coin, but you might just be providing information about the coin. You might be creating events around the technology. You might be creating a platform teaching people about these things. These are opportunities that happen in the emerging markets. So yeah, straying off our initial conversation, initial question, I think the cryptocurrency is the truth. I think there's going to be some altcoins that definitely, and some very smaller cap coins that are going to position themselves well, that are going to allow people to still become crypto millionaires and billionaires. And I think at the moment, from a technical perspective, I really want to see whether or not this market's going to, from this middle of the range, decide to come back down into here, or continue pushing up and breaking, all-time highs. Okay, because we're very close to previous highs. We're not far off it, and yeah. And Bitcoin, watch Bitcoin. Whatever Bitcoin does, just like US dollar, the rest of the industry catches a cold. All right, so if Bitcoin starts to boom, it's good for all things happening in cryptos. If Bitcoin starts to go to shit, it's a bit of a concern for short-term potential of the other coins. Any other questions, guys? Any other questions? Remember, I'll say to you, like, I really think you guys should become nerds and start paying attention to all things that are happening, especially, in the tech space. Yeah, I think it can't harm you. That's all I think. I think it cannot harm you for you to be on the button to know certain things that are happening. Yeah, esports, metaverse, AI, robotics, cybersecurity, crypto coins, blockchain. We could keep going. RWS, also RWA, which is real world assets. Yeah, tokenization. All these words here, you should know what they are. It's not going to harm you. But with that said, let's go and see if we can get some education in the space. Let me actually slam it in YouTube and see if we can learn something. Let's write in there. All right, we're going to watch a 9-minute TED talk, which is, I'll tell you what we can do. Yeah, we're going to watch 2 of them. A 9-minute TED talk, which is 12 predictions for the future of technology. All right, which is a TED talk, should be good quality. Then there's another one, which is 20 emerging technologies that will change the future. Okay, 20 emerging technologies that will change the future. Because I know this is about trading and it's about us, understanding the markets. But understanding the markets is to understand the world. Yeah, and is to position us. That's why we're here. We're trying to take advantage of being able to trade on computers and hit the button and make money. This is technology. It's technology that's allowing us to trade. Just like algorithms right now, and the bots life and AI is affecting the markets as well. People are out here trying to make AI bots and bots that can figure out the markets. And I'm sure someone's already done it, making gazillions out of an AI bot. I'm certain of it. Yeah, but you're not going to be able to do that unless you learn how to write AI code, or you position yourself with people who know how to do the same. All right. But guys, good morning. God bless. Amazing day, I should say. And let me play this video, which looks really interesting. I'm going to be watching, and I hope you guys have an absolutely fantastic, amazing day. Go fulfill your potential. Think in the back of your minds. Now is the time of opportunity. No matter how much life starts life in, because life is always life in for everybody. Don't get twisted. Yeah. But right now we're living in a great time whereby, there's so much opportunity for us to do big things. Not the short term. The short term can be tough, guys. Do you understand what I'm saying? Because short term, you're making transitions, things are going, etc. But in the bigger picture, looking at that bigger picture, there's an amazing opportunity for you guys to go and become millionaires, billionaires. Remember, our parents or our parents' parents never had the potential of becoming multi-millionaires. Their ceiling was a little bit lower. But our ceiling is higher, and it's going to continue to get higher for our kids and their kids and whatever it may be. So right now, guys, there's every reason why we can become multi-millionaires and billionaires in this current world, guys. But amazing day. Enjoy your day. Be empowered. Be inspired. Do something great.
Progress, because they don't think non-linearly. They don't think of the improbable. I personally believe only the improbables are important. We just don't know which improbable is important. Entrepreneurs, on the other hand, with a passion for a vision, they